Sampath Reddy of Bajaj Allianz Life Insurance joins us now. Thanks, Sampath, for joining us. Well, first up, you guys are long-time pickers more than anyone else. Where are you looking for opportunities in the market that is clearly about 10% cheaper?
Right. Yeah, given that markets have come down substantially in the last couple of weeks, I think there's we are finding a lot of value among the across the segment, especially in the mid cap ones. Mid cap companies have fallen substantially in the last few months, so there the value is emerging. And but if you look at it in the macro side, there has been some sort of a disappointment, given especially the slowdown, particularly in the automobile sector, and also spreading that into the consumer sector as well. Yes, there is a macro headwinds right now in terms of earnings growth, and even if you look at the corporate earnings growth, also largely it has been the below expectations. I would say the growth on an aggregate basis would not be more than 4-5% in terms of earnings growth for the quarter. Vis-a-vis, but the full year expectations are about 15 to 20% kind of a growth one is expecting for the full financial year. I think a lot of this corporate earnings growth will be back-ended. We are very optimistic about the earnings growth for this financial year for surely. And given that markets have corrected substantially, I think there's a value emerging across the spectrum. It is just that what's happening in the last few months is that market has been rather investors have been holding on to the few select 10-15 stocks itself, but barring those 10-15 stocks, I think the value is there across the wider segments of the market, I would say, at this point of time.
Well, Sampath, will you be sticking to the safety of Nifty, or do you think since mid caps are now in bear territory, 25% of their highs, that's the place to fish for?
Not only the mid caps, but even in the larger cap segments also, some of the sectors, let's say for example even pharmaceutical or even IT services, they've also been trading at a very attractive valuations. They've been beaten down a lot in the last couple of years, especially the pharmaceutical sector. Now seems to be that the valuations are attractive, and even the business environment also seems to be improving there. So there's a value emerging across the segments, barring 3-4 or maybe it's about 10 stocks which have been performing very well in the last few months, excluding them. Most of the spaces, the valuations are very, very attractive. Given that now the rupee is beginning to depreciate, the sectors like pharma and IT, which will be the large beneficiaries of the the rupee depreciation as well. By and large, most of the companies in this IT services space, are trading below 15 times multiple. Excluding it, overall, if you look at the market as such, there's a huge divergence between the one or two good companies versus the mid and small cap companies. Take for example within the IT itself, the TCS Infosys are trading almost about 18-20 times, but rest of all other IT services companies are trading closer to 10 to 12 times kind of a multiple. So that's where the divergence has been. So investors have been flocking towards the safety in the larger and liquid companies. I think the time has come to look for a value investment value stocks across these sectors.
Sampath Reddy, very quickly, the insurance companies are now allowed to sign intercreditor agreements. Are you seeing a good end to the DHFL resolution, and therefore probably the contagion somewhat getting stemmed?
Yes, insurance companies are now committed to enter into the intercreditor agreement. I think that's a positive step. Hopefully, because of this, one will be able to find a resolution for the DHFL very soon. But I would say at this point in time, the NBFC liquidity crisis is far from over. It is still some more time away. I think even in the market today, nobody's giving money to some of these NBFCs where the asset quality concerns are very high. So it is yet to we are yet to come out of this, I would say, NBFC liquidity crisis as of now.